Hello everyone, I am Dr. Vasant Boraste. Today I am going to discuss with you the company final accounts first example, which comprises the balance sheet and we will see how to prepare the balance sheet. So let us start the practical example. So here is the company final account as per the Companies Act 2013. Let us start the example. So you can see here Bharat Limited Mumbai disclosed the summary of ledger balances appearing in the financial books of accounts on 31st March 2019, where certain debit balances as well as credit balances are given. You can take a screenshot of this example or you may download the video. Further, I would like to suggest one thing that you have to see this example on YouTube in the setting menu. Go to setting menu and click on the setting, and you have to see it under 360 pixel or 480 pixel. So debit balances are there. Stock on 31st March 2019, raw material, work in progress, finished goods, loose tools, building under construction, machinery at cost, furniture and fixtures at cost, vehicles at cost, computer software under development, cash in hand, trade receivable, investment that is non-current, balance in bank a current account, advance payment of income tax, checks and drafts on hand, interest accrued on investment, profit and loss account as on 1st April 2018, and biological assets. So these all amounts and debit balances are given, as well as there are certain credit balances that is issued and subscribed capital 6,000 equity shares of rupees 100 is fully paid up and called up. Provision for taxation is there, general reserve, long-term maturity of finance lease, unclaimed dividends, staff provident fund, public deposit, depreciation provision, trade payables, PB, profit after tax, current maturities, employee earned leave payable on retirement. So the amount is given as well as certain items are given. So let us start the solution and what it has been asked. So for read this one. From the balances given above, prepare balance sheet as on 31st March 2019 of company as per Indian Accounting Standard in accordance with Division 2 of the Schedule 3 of the Companies Act 2013. So, you have to prepare a balance sheet as per the Companies Act 2013. So, let us start the balance sheet. So, let us start the solution. First of all, we have to discuss the various items which we have to put in the various notes. For that, you have to prepare a pro forma of balance sheet and certain notes which we have to prepare over here. Here we have to prepare a notes called as property, plant and equipment. Which notes we have to prepare? First of all, we have to discuss it. Before that, we have to mention the items, that which item will be posted in the which notes. So we have to sort out the items. So first of all, first item on the debit side of trial balance, or we can say balances which are mentioned over here, we have to choose and we have to write some things in front of these items. So first one is stock as on 31st March 2019. That means the item of stock will be posted in the note as inventories. So here I am going to write down inventories. So stock, that is raw material, work in progress, finished goods, and loose tools. Everything will be posted in the note. That note will be called as inventories. So inventories for all these things. After that, there is building under construction. As we have already discussed that if the building is under construction, it is called as capital work in progress. So here I am going to just writing down capital WIP, that is work in progress. Machinery at cost. In the last video of the uh, headings and subheadings, or we can say summary chart, where we have see that machinery at cost, it has to be recorded under the property, plant and equipment. So it will be posted under the note of property, plant and equipment. Furniture and fixtures again will be posted in the same property, plant and equipment. Vehicles at cost, again it will be posted in property, plant and equipment. Now we have a computer software under development. So computer software, it is an asset, that is intangible assets under development. So it will be posted in intangible asset under development. Okay. Then cash in hand, as you know, cash in hand will be posted in cash and cash equivalent. So CCE, cash and cash equivalent. Trade receivable, same title is there, trade receivable. Investment, investment and property. So it will be posted in investment and properties. Then bank balance in bank current account. So balance in bank current account again will be posted in CC, that is cash and cash equivalent. Advance payment of income tax. So this is current tax liability and we have to deduct it. So current tax liability and we have to deduct it. Current tax liability. Here I am going to put one sign, that is minus sign in bracket, minus. That means we have to deduct it. Then checks and draft. Checks and drafts. It will be again posted in cash, cash and equivalent, that is CCE. Then interest accrued, CCE. Interest accrued on investment. This is other current asset, OC. I am going to putting here OCA, other current asset. Profit and loss account as on 1st April 2018. This is it has to be recorded in other equities. And last one is biological asset. It will be recorded in the biological assets and other bearer plants. And other bearer plants. So this is the debit side of or we can say debit balances, where we have to put. Now on the credit side, there are certain items which we have to ascertain that which item we have to post in which notes. So first one is issued and subscribed capital. As you know, it will be recorded in equity share capital. Second one is provision for taxation. So this is the provision for taxation. Provision for taxation, it will be recorded in current tax liability. So I am putting here current tax liability. So CTL. CTL, current tax liability. General reserve, this is other equity. And then long-term maturity of finance obligations. So this is borrowings. Then unclaimed dividend, again same, unclaimed dividend, other financial liability. Staff provident fund, next item is staff provident fund. It will be recorded under the head provisions. Then public deposit, again it is a borrowings. Depreciation provision, so it will be deducted from, here I am putting the sign of minus, deducted from property, plant and equipment. Then trade payable, under the same head, trade payable. Profit after tax, so this is other equity and we have to add in other equity. So I am putting here plus sign, we have to add it. Current maturities of long-term debt, so this is other financial liability, other financial liability. Then last one is employee earned leave payable on retirement. So this is the provision. So in this way, we have to find out which item will be posted in a concern note. So let us start this solution. So as you know now the various items, first one is stock, that is opening balances of raw material, work in progress, finished goods and loose tools. So it will be recorded under the head inventory. So under the note inventory, we have to write down as all these assets. So cash, stock, sorry, raw material, work in progress, finished goods and loose tools. So here I am going to putting the note number 7, that is inventory. So here you can see the inventories. Let us see. Stock as on 31st March 2019, raw material stock 37,500. Here you can see 37,500. Then work in progress, finished goods and loose tools. All these items are pasted over here. Then second item, next item is building under construction. As we have already discussed, it will be recorded in the capital work in progress. So building under construction, second item, second note is there. You have to prepare these notes. Building under construction. So you have to prepare these notes with the help of four column note number, particulars, amount. It is useful as inner column or internal column. Last one is final column. After that, the next item is machinery at cost. So these all three are property, plant and equipment. So we are going to put it in the asset side, that is property, plant and equipment. So here this is the property, plant and equipment. Machinery, furniture and fixtures, vehicles. These all three are the assets which we have taken from here. There is a depreciation, so I have mentioned here the depreciation, but we will discuss it later on. Less depreciation provision. So again, I am going to do the same things. Okay. The next item is computer software under development. This is intangible asset under development. So computer software under development. So intangible asset under development. You can see here the intangible asset under development. The note name of the note is intangible assets under development. That is 50,000. So amount is 50,000. Then cash in hand. It will be recorded in the cash and equivalent. So cash and equivalent. Uh, Here biological asset is there. Cash and equivalent. Note number 8 is there. Cash and equivalent. So again, I am going to writing all these things over here. Cash in hand, cash at bank, current account, checks and drafts and drafts. Checks and drafts. Okay. Next one is trade receivable. I have posted cash in hand rupees 8,000. Then balance in the bank account 32,000. Checks and drafts on hand, that is 17,000. All these three items are pasted over here. Okay. Now the next item is after the cash in hand, trade receivable. It will be recorded in trade receivable. So trade receivable is there. You can see here the trade receivable 1 lakh. So here the amount is trade receivable amount is 1 lakh. Then investment non-current, that is investment and properties. So on the item of investment and property, here note number 3 is there, 2,48,000. So investment and properties 2,48,000. Then balance in bank current account. So you can see here balance in bank current account, as I earlier mentioned that. Already mentioned cash at bank account, current account, that is 32,000. So here is the amount 32,000. After that, advance payment of income tax, that is, it has to be deducted from current tax liability. So I am going to down the current tax liability, where we have to minus the tax, that is current tax liability. So here you can see the provision for taxation. Amount of provision for taxation is 65,000. On the credit side, here you can see the provision for taxation 65,000, and the advance payment of tax is rupees 45,000. So it has to be deducted. But that means our tax liability was 65,000. We have already paid 45,000. Still we have to pay the balance of tax, that is 20,000. So this is the difference between actual provision and actual payment. After that, checks and drafts on hand, as I earlier mentioned, it is already pasted over here, cash and drafts on hand. After that, the next asset is, or next debit balance is interest accrued on investment. So it is OCI. It will has to be recorded in other current assets. So here the other current assets 2,300, amount is 2,300. Then profit and loss account balance on 1st April 2018, that is other equity. On the liability side, there is one item, that is other equity. So second one is, so I am putting over here the second item, that is others equity, that is profit and loss account balance, that is debit balance, means minus balance 6,700. So the amount is 6,700. Debit balance means it is given on the debit side. The profit and loss account balance is given on the debit side. That means debit balance. It simply means that it is a loss. So it has to be debited. It has to be deducted from the uh, uh, debit credit balance. After that, there is a biological asset. It has to be recorded on the biological assets and other bearer planned. So here we have one biological assets. The note is biological asset. Okay, now uh, see, the biological asset amount is rupees 47,000. So it will be recorded in the biological asset note. After that, on the credit side, there are certain items: issued and subscribed capital, that is equity share capital, 6,000 equity shares of rupees 100 each, fully paid up, fully called up and paid up rupees 6 lakhs. So it is a liability. On the liability side, first item is equity share capital, or first note is equity share capital, and the total number of note, it may be changed. It may be 3, 4, 5, 7, 10, 11, whatever it may be. You have to just keep it in mind that note number doesn't matter, but the items which we have to pay, this takes matter. So equity issued and subscribed capital 6,000 equity shares of rupees 100 each, fully paid up rupees 6 lakh. After that, the next item is provision for taxation rupees 65,000. We have already pasted this item, provision for taxation rupees 65,000, in the last entry when we write down the advance payment of income tax. The provision was rupees 65,000 and actual payment made rupees 45,000. Still we have to pay a current tax liability of rupees, net amount is rupees 20,000. After that, general reserve is there. It is also other equity. So in the other equity note, we have to mention the general reserve amount is rupees 1,12,000. So here the amount is rupees, general reserve amount is rupees 1,12,000. Then long-term maturity finance obligation, it will be recorded in the borrowings of rupees 1,04,800. So under the head borrowings, you can see here the amount of long-term maturity of finance lease obligation, that is 1,04,800. Again, there is a public deposit in the next after two items, that is 10,000. Then unclaimed dividend, other financial liability. So on the liability side, other financial liability is there. In that we have to mention the liability of other financial liability, that is our liability of unclaimed dividend. and current maturity of long-term debts, that is 10,500 and 23,900. So here 10,500 and the amount of current maturities of long-term debt, that is 23,900. After that, there is a public deposit. It has been already recorded in the borrowings under the head of borrowings, that is public deposit 10,000. After that, there is a depreciation provision of rupees 52,000. As I earlier mentioned, it has to be deducted from the property, plant and equipment. Our first note is property, plant and equipment, where we have to consider, or we have to deduct the depreciation amount of rupees 52,000. So here is the depreciation amount of rupees 52,000, which we have to deduct. So 52,000. That means 3,74,000 is our total asset and depreciation provision is rupees 52,000. So the total of property, plant and equipment comes to 374 and the depreciation provision is 52. So the balance property, plant and equipment rupees 3,22,000. After that, our next item is trade payable, which has to be recorded under the head trade payable. So on the liability side, there is one note that is called as trade payable, where we have to put the amount of trade payable, that is amount rupees 1,52,100. After that, profit after tax, which we have to add in the other equity. So on the other equity column or other equity notes, there is a profit after tax of rupees 50,700, which we have to add. After that, we have one liability of, that is current maturity of long-term debts. It has to be recorded in other financial liability, that is 23,900, which we have already recorded. After that, the last item is employee earned leave payable on retirement. That means on the retirement of an employee, we have to pay some amount, that is provision. So amount is 30,000. So under the head provision, we have to mention the employees any kind of payment which we have to be made in future, that is employee earned leave payable on retirement, that is 39,000. Staff benefit fund is already we have recorded of rupees 39,000. Here this is staff provident fund 39,000. So in this way we have to calculate the various notes, and all these notes will we have to accumulate in the balance sheet. So here property, plant and equipment amount is rupees 3,22,000. Then capital work in progress rupees 1,70,000. Then investment property 2,48,000. Intangible assets under development 50,000. Biological assets and other bearer plant of rupees 47,000. After that, trade receivable 1 lakh. Inventories of rupees 1,50,000. Cash and cash equivalent of is rupees 57,000. Other current asset is rupees 2,300. So in this way we have prepare and notes for assets as well as liabilities. Equity share capital of rupees 6 lakh. Amount of profit and loss account, that is opening balance, which is debit balance, is rupees 66,700. Profit after tax is rupees 53,700 and profit and loss account surplus amount is rupees 44,000. So this is the solution, and profit and surplus, that is profit after tax is 50,700. That means we have a profit of rupees 50,700 minus 6,700 equals to balance will be 44,000. So profit and loss, that is surplus for current year, is rupees 44,000 and our general reserve was rupees 1,12,000. So amount the total will be 1,56,000. After that, borrowings total is rupees 1,14,800. Provision, that is long term provision, is rupees 69,000, which is the total of staff benefit fund and employee on leave payable on retirement. And trade payables are there 1,52,100. And the second last liability is other financial liability, which comprises unclaimed dividend and current maturity of long term debt, that is 34,400, and current tax liability rupees 20,000, which is after the deduction of advance payment which we have already made from the provision of taxation. So in this way we can calculate the notes, and after this calculation of notes we have to put all these figure under the appropriate title, that is first one is property, plant and equipment, capital work in progress, investment, This we have to decide as per our example. So whenever you are going to mm, writing down your example, or so when you are going to solve this example, you have to consider which note we have to prepare. So here we are, when we have write down the proper head or proper note name, then we are able to solve this example. So after that, we can solve the balance sheet. So here is the balance sheet in the books of Bharat Limited. Balance sheet as on 31st March 2019. It is vertical form, as prescribed under Division 2 of Schedule 3 of the Companies Act 2013. So the formula, as in the first video I have discussed about the pro forma of balance sheet, where the liabilities was firstly mentioned and after that the assets was there. But as per the Division 2 of Schedule 3 of the Companies Act, we have to mention asset firstly, then we have to mention the liabilities. So here the assets are divided into two categories, that is non-current asset and current asset. So non-current asset again divided as property, plant and equipment, capital work in progress, investment property, goodwill, other intangible assets under development, biological assets other than the bearer plants, and financial assets, as well as financial assets are subcategorized as investment, trade receivable, loans and others. With this, there are two different assets, that deferred tax assets and other non-current assets. Then the second part of asset is current asset, where we have to subcategorize each as inventories, financial cost, other tax assets and other current assets, while financial cost is again subcategorized as investment, trade receivable, cash and cash equivalent, bank balance other than above 3, and loans and others. So this is the asset side. The simple way of solution is that here I have put the total of property, plant and equipment. Here you can see the property, plant and equipment total is 3,22,000. So I have put here the amount of 3,22,000. After that, capital work in progress is rupees 1,70,000. So here is the capital work is 1,72,000. Investment property is 2,48,000. So here the investment property is 2,48,000. After that, our next working note is intangible asset under development, that is 50,000. So here intangible assets under development 50,000, biological asset we have taken it 47,000 from here, that is biological asset and other bearer plant. After that, the trade receivable amount is rupees 1 lakh. So here the trade receivable amount is rupees 1 lakh. After that, inventories amount is rupees 1,50,000. Here you can see the amount of inventories under the head current asset, that is 1,50,000, and cash and cash equivalent is amount rupees 57,000. So the amount of cash and cash equivalent is rupees 57,000. After that, there is other current asset, that is 2,300, which we have posted over here. Other current asset 2,300. The total of asset is rupees 11,46,000, which has to be matched with the total liability. So after that, we have put the liability side, that is on the liability side, equity share capital is rupees 6 lakh and other equity is rupees 1,56,000, which you can see here the equity share capital of rupees 6 lakh and other equity is rupees 1,56,000. And here is the column which is most important column, which is note number, which we have taken from this note column, that is note column. Here the note number is 11. So under the head 11 note number, the item is other equity. Then liabilities, that is non-current liability, financial liability, again it is subcategorized as borrowings. So the amount of borrowing is under the note number 12, that is 1,48,000. So here the note number 12 is 1,14,000, sorry. Then provisions, that is 69,000. Here you can see the provision of rupees 69,000 under the head provision of major head, that is non-current liabilities. Then there are certain deferred tax liability, if any there we have to mention. Then current liabilities, that is financial liabilities, borrowing, trade payables. Here the amount of trade payable is 1,52,100, which is taken from the note number 14, that is trade payable amount of rupees 1,52,000. After that, there are two liability, that is other financial liabilities 34,400. Here you can see other financial liability 34,400. And the last liability is other non-current liability, which is 20,000, which is after the provision for taxation and advance deduction of advance payment of tax from the provision, that is 20,000. So the total is 20,000 of other non-current liability. Here you can see the total equities and liabilities is rupees 1 lakh 46 1 lakh sorry 11 lakh 46,300, and the total of asset is 11 lakh 46,300. That means our solution is correct. So in this way we can solve the examples of company final accounts. With this, I would like to say thank you very much. In the next lecture, we will see another example of company final account. Thank you very much.